All right, here's our gold. Let me zoom in. Everything looks more or less fine. Now, check this out. These are secondary entries, not primary ones. And secondary entries usually happen in the afternoon during the US session. The problem with late entries, by then the asset usually runs out of energy. That's why breakouts are mostly traded in the morning. Visually, the setup looks good. But in terms of understanding, you're probably missing some key details. Let me break it down. For gold, the main sessions are China, England, and of course the US. The US market opens at 9:30 a.m. and that's when things start moving. Futures are technically traded all night, but at some point market volumes drop. So what happened here? You traded in the afternoon when the asset had already lost momentum. If this setup had appeared in the morning, it would have been solid. But by then, there just wasn't enough time left for the move to play out. All right, moving on. Boss, tell me, where's the mistake? Okay, look, I'm not checking this yet, and not this either. First off, just because a trade is unprofitable doesn't mean it was a bad trade. Losses happen. Stop losses are part of the game. I take them. Everyone takes them. Sometimes you do everything right, but the asset just doesn't move. It happens. All right, moving on. This is a daily chart. There's nothing wrong with this trade. It just didn't play out. Nothing bad here. No major pullback. We went for a second retest. Still nothing bad. Can this be considered a retest, even if there is a 15-cent error? Yeah, it can. But here's the thing, the setup was fine. It just didn't move. Now, let me be straight with you. This trade was kind of messy. I'll explain why. From a daily chart perspective, it looks solid, but on a short time frame, when the asset starts bouncing up and down around the level like this, I prefer to stay out. I'm all about primary breakouts. Look at what happened here. We had one move, then a second, then a third. There are too many moves like this, which is why I typically avoid opening any trades. I like primary breakouts. See this first breakout, second breakout, third, then a fourth. The directional movement started only for the fourth time. I don't trade these kinds of setups. All right, let's keep going. So here's the thing. You say you didn't like this huge volatility, yet you keep getting there regardless. This is a tough setup. Apple itself is a heavy stock, not the easiest to trade. And everyone keeps asking, point out the mistakes if there are any. Listen, if there's a mistake, I'll tell you. Don't overthink every trade. I can see it. You already have this mindset that every trade must have a mistake. Now, you traded a breakout. This is a rough trade. Let me explain again. The second time, third, and fifth. The strongest breakouts are always primary impulse breakouts. If an asset struggles to break out level multiple times or the price goes up and down around it, chances are it's likely that there will be no impulse. 3 out of 5 charts I was sent have the same issue. You're jumping into secondary or even third breakouts. Try to catch the first one. See what happened here? First attempt failed, the price went up and down around the level and then finally moved. So next time be extra careful. Daily chart breakout. See? Primary breakout. Take profit right away. And here we go again. Who is this? Maxim Ostapenko. Very solid trade. See? Primary breakout. No pullbacks. Level confirmed. Excellent take profit. Great trade. Quite simple too. There was no up and down movement around the level. This is the primary level. There was no deep pullback. We approached the level. Really good stuff. All right, let's keep going. Martin Ivarinin, S&P is up. Let's take a look. Okay, call options were bought. Nice reversal trade. Really solid. This is a return move. Now, check this out. Now, this is another one of those setups where there's no impulse. See what I mean? Look here. You'd expect impulse, but it's just not there. So let me break it down real quick. Every asset, whether it's stocks, crypto, or Forex, has long and short zones. Sometimes when an asset enters a strong long or short zone and there is no impulse, what does that mean? Look closely. Right here, you've got a solid strike base, which is an area where a lot of interest is focused on option contracts. The assets wants to drop into the short zone, but instead buyers step in and buy it back. No impulse where it should be, or at best, a clean false breakout. Still a great trade. Almost a full profit on the option. All right, let me check. A call option with a strike price of 595 was bought super cheap. Great trade, and here's why. Dirt cheap call options. For that price and strike, these were ridiculously cheap. If you don't know options, this might not make much sense. But if you do, you get it. Here's the setup. A strike price of 595, price at 594.50. Basically, a super cheap option, which is why it spiked so well. Fantastic trade. Well done. All right, let's keep going. Short breakout trade. Here's the trend. There's no reaction to the false breakout, no pullback, accumulation, stop loss set behind a 30-minute bar. No issues with the trade itself, but there's one problem. From a daily chart perspective, it looks great, but on the 5-minute chart, it's a mess. I've explained this before. Look, first attempt, no breakout. Second attempt, no breakout. Third and fourth attempts, still nothing. What does that tell you? The asset isn't ready to move yet. It can keep attempting breakouts all day. But ask yourself, if it couldn't break out 4 times, why would it succeed when you enter? All right, let's move on. Uptrend trade, but next time mark your levels clearly. Just add an arrow. Quick reminder, these live streams are for you guys. If you can't describe your setup, just mark it. It's all there in the chart. Just put an arrow where the level came from so others can see it too. Now, about that stop loss, it's way too big. You got lucky this time. The trade is solid from a chart perspective, but your stop loss is just huge. Here's why that's a problem. For gold, an average stop is around $3, but you bought at 26.58, $26.60, and set a stop at $23.53. That's nearly $7. That's a double stop loss. I usually don't even enter positions with stop losses that big.